Welcome Investorholics, and those new to the channel, this is the ETF Spotlight review. Today we'll be looking at Qual, which is the VanEck Vectors MSCI World ex-Australia Quality ETF. Every investor should be looking for quality investments that would allow them to build a long-term wealth and build that wealth consistently. As highlighted by Benjamin Graham, over the long term, the equity investment strategy that have done well have focused as much on capital preservation as achieving growth. So you definitely want to be looking for investments that actually have a little bit of a defensive bent to them, and during the hard times can actually perform well. Well, hello there Investorholics, this is Scott. Crack the Sky Value Investing will be giving you up-to-date investing news and content so you can navigate the markets wherever you are. My mission is to give you the knowledge and confidence to take control of your own personal finances, expand your investment horizons, and crack your financial sky. So let's have a look at the investment objective here. So Qual seeks to track the performance of the MSCI World ex-Australia Quality Index with net dividends reinvested in Australian dollars before taking into account fees and all the other expenses. The MSCI World Australia Ex Quality Index is based on the traditional market capitalisation weighted index. The MSCI World Ex Australia Index, which is the parent index, which includes large and mid-cap stocks. So it doesn't really look at the smaller end of town, so definitely looks at just the larger mid-sized cap companies with higher quality ratings. Why are we looking at this one? The quality index aims to capture the performance of the highest quality growth stocks from the parent index on the basis of a quality score determined by the three key factors below here. So you're looking for high return on equity, stable year-on-year earnings growth, low financial leverage, so pretty much no debt. The equity index reweights the selected quality growth stocks from the parent index to emphasize stocks with the highest quality scores according to MSCI. So you're looking for companies with low debt, because those companies tend to survive downturns, and you don't have to recapitalize. Like now we're seeing a lot of companies recapitalize because they pretty much have too much debt or not enough money in the bank to survive the bad times, the rough times. Net asset value of 31.43, trading below that actually at 31.32. Market cap of 1.1 billion, so we're seeing quite a bit of money flowing into this ETF over the last 12 months. Management cost 0.4%, quite possibly a little bit high for this type of ETF. Looking at a distribution yearly, late July, a dividend yield of 1.29%, but obviously that goes up depending on the share price, or down depending on the share price, vice versa. QUAL is a strategic beta ETF delivering a portfolio of global equities with quality attributes that perform with merit. Quality has defensive characteristics and tends to outperform during market downturns and periods of volatility. QUAL lets you achieve instant international diversification as the ETF invests in overseas equities. So as the name says, ex-Australia, so excluding Australia. This ETF could be used as a key component of a diversified portfolio. As an investment in this ETF gives you access to all the major international markets. Qual has performed well over the past 5 years, giving an investor a bit over 13% returns. If you want to have a look at some other ones, which you should always do additional research, quite possibly have a look at IWLD and QLTY. So we can see here the top 10 companies. And no surprise that some of the biggest companies in the world are predominantly American. So the American companies definitely do dominate that top 10. The United States makes up 72.75% of the index. Break that down a bit more, you've got information technology makes up 35.2% and healthcare makes up 20.4%. So Qual's growing market cap is testament to a solid low-cost strategy that should deliver good capital growth over the long term. So year to date, we look at money flows. As I mentioned before, we've seen $203.6 million invested in QUAL. Over the last 12 months, we've seen $388.2 million invested in Qual. So it's one of the better performing, maybe not performing, but it's kind of reached a lot of investors' radars and they think it's a decent investment. There's a few of these type of ETFs, so have a look at it. As we touched on before, total returns of just over 13% for 5 years. Since inception, you're looking at just over 16%. But as always, previous results don't necessarily be replicated into the future, so you always need to be aware of that when we're investing. But I think on the whole, this probably isn't a bad ETF to have a look at. From memory, this one gets a rating from Morningstar of bronze. Definitely a one to have a look at if you're looking at a simple way to diversify your portfolio. If you decided to buy 2 ETFs, an index for Australia, an index for international, this one might not be a bad one to look at. So you could buy this one and say VAS. So you only own 2 ETFs, VAS and QUAL, and you've pretty much diversified throughout the world. But that's just an idea. If you want to keep things simple, simple investing, that's definitely a way to look at it. Are you interested in learning more about personal finance and investing in the markets? If you are, then smash the like here on the left hand side and caress the subscribe button on the right hand side. It's Crack the Sky Value Investing. We'll be giving you up-to-date investing news and content so you can navigate the markets wherever you are. Expand your investment horizon and crack your financial sky. Thanks guys. See you later.